Hello, everyone. The important part of OpenAI's Stargate news is not that AI demand is getting weaker. The real change is this. AI infrastructure competition is moving from who can announce the biggest plan to who can actually connect power, land, capital, and compute capacity. Stargate is a massive AI infrastructure project centered around OpenAI, Oracle, and SoftBank. At first, the market focused on the size, up to $500 billion, up to 10 gigawatts of AI infrastructure, large data centers across the United States. But the recent reports raise a different question. OpenAI is reportedly reworking parts of its Stargate strategy and putting more weight on securing compute capacity from outside operators over the long term, rather than directly owning and operating every data center itself. That difference matters. Owning and building directly gives more control. But it also means taking on power contracts, land acquisition, equipment procurement, regulatory approvals, local opposition, and financing risk. A long-term leasing or partner-based model can move faster. But then margins, contract terms, supplier dependence, and long-term cost structure become more important. So the core issue with Stargate is not that OpenAI cannot build data centers. The point is that the cost structure of AI compute is much more complicated than the headline numbers suggest. A large AI data center is not completed just by ordering more GPUs. Power has to be connected. The grid has to support the load. Cooling and electrical equipment have to arrive. Each site has to pass its own permitting and local conditions. At the announcement stage, everything looks like one big number. $500 billion, 10 gigawatts, massive data centers. But at the execution stage, each site breaks into a different set of problems. Power prices, grid connection, local resistance, equipment lead times, and financing structure all become variables. That changes the question investors should ask. Not just how much CapEx was announced, but how much power has actually been connected. Which sites have actually broken ground? Who can deliver the equipment on time? Who owns the assets, and who carries the long-term cost? This shift matters for Oracle and SoftBank as well. Oracle may gain a new growth opportunity from expanding AI infrastructure, but at the same time, data center investment, debt, customer concentration, and long-term contract execution risk also increase. SoftBank faces a similar issue. Stargate is not just an AI theme investment. It is a massive capital allocation decision. Even if AI demand remains strong, the market can become more cautious if payback speed and financing conditions do not line up. That is why Stargate is not only an OpenAI story. Meta, Microsoft, Google, and Amazon will face the same test. The key question is no longer just how much they spend on AI. It is whether that spending actually turns into usable compute capacity, and whether cash flow can support that cost along the way. Stargate's adjustment is not a sign that the AI boom is over. It is a sign that the AI boom is entering a more realistic phase. The market may start pricing not the size of the dream, but the speed of execution and the real cost structure behind it.